That is correct, Mr. Ware. Happy February 1st, everybody. Well, let's see if we can't make sense out of this this market here this morning. Here, let me take some of these. We can come back to these retracements here in just a second. Not itching to get into any trades here this morning as of yet. Kind of zoom out on a lot of these. Show you what's kind of been shaken out in the long run. You know, after Friday, you know, obviously the big mover on Friday, the one that shook the market up a little bit was the yen, with the Bank of Japan going to negative interest rates. You can see what it's done since then. Since the big up move that we had on Friday, it's been nothing but consolidating, along with a lot of these commodity pairs right in through here. Now, these are really interesting when you look at the yen and the yen crosses over in here with the higher yielding assets. What I find to be interesting about them right now is the fact that we still don't really know if people have been asking me, do I think the yen can experience further weakness? Well, yeah, they went to negative interest rates. However, we still are not sure right now if the yen will continue its journey into trading what we call risk off, meaning right now the markets are indicating a negative open. We got the Dow futures are down 100, like 117. We got S&P futures down 15, NASDAQ futures down 25, crude's down 3.45%. So we're indicating a negative open right now, and you can kind of see the consolidation right now on a lot of the yen pairs. The ones that have retraced based on the negative market open is we've had the euro experiencing some strength. That's coming up into our retracement zone right now. We got the pound experiencing some strength based on a lot of the downward pressure in the market overnight. DAX was also down. The FTSE was down. So, I mean, pretty much global markets have been down overnight. And then we got also the Swiss down overnight. Actually got stopped out on the Swiss on Friday. It wasn't a huge stop out. I lost like I think we were risking 40 to make 40 pips, and I got stopped out for, I believe it was about 18 pips, 20 pips, I believe. Got stopped out on the Swiss from Friday's trade. So the way to, you know, obviously when you looked at mixed market data such as this, there's two things I want to look at today. One of them being trading into any type of dollar retracements that we have as of right now, and then also looking to trade perhaps any signal that the yen pairs are going to come down. I think we should trade into that also. So we'll start off with retracement trades. We'll start off with one that we had from Friday. Obviously the BOJ. I had to pull this back up here at the beginning of class. No key news today. Well, we have the Australian interest rate decision this evening, but we're not going to trade Aussie. So no significant news today that's really shaken anything out of the markets, which means trade technical, and we'll look for trades in either direction. Look to trade dollar strength into retracements, and then as more of a dollar weak strategy, we're going to take a bit of a gamble here and look to trade risk off with the yen pairs. I think it's worth trying this out because I think if the yen pairs do break down, I think they'll break down big. Otherwise, after the market opens at 9:30, if there's any type of recovery, you could see them shoot back up. But I would like to trade, you know, more risk off with the yen pairs. Even though they went negative interest rates, that's not the end all be all of the yen continuing in its weakness right in through here. So let's go to one that we were looking at on Friday that I said we'd pay a little bit closer attention to here today, and we'll start with the euro dollar right in through here. Now, you know, as it was coming down right in through here, it started to make a divergence, and you saw the LP trend line start to come back up, indicating a significant amount of buying pressure. But since the opening of the London session, it's actually been sidling out a lot. It's been kind of going sideways. The one that we were looking at where we liked was from this swing high to this swing low right in through here. There we go. Was looking to trade into any type of retracements on here. It's been making kind of a steep trend line to the upside. It's kind of come up into its retracement zone. It's tried this morning to come up and hit this 109 level, even with the futures down. But it looks like this retracement is starting to weaken a little bit, and I think it's worth it for us to kind of look for trading. There's 3 retracement trades that we can look at, so I'm going to look at 3 different ones, and you can kind of look at all 3 of them. Not all 3 of them. Kind of pick one out of the 3, and you can almost go with whatever executes first, essentially. We'll start here. Now that it's come up into the 61.8 to 78.6 level, it comes up and touches this 78.6 level, which is right at 109. So if it comes up and touches 109 and it gets to a -5 on the 1 hour totals, I think you can go look to sell on the euro dollar. Since it is in the retracement zone, if you start to see it break down, if you're a big euro dollar trader, and if you see it start to break down and you start to see it come significantly below this trend line right in through here, there is an intraday trend line that's formed right in through here to the upside. So it's in the retracement zone. Essentially, you could almost look at the sell entry in 2 ways. The closer it is to 78.6, I think the better odds we get as far as the overall risk reward on the trade. Or you know what? I'm going to do this just a different way. 78.6 would be nice, but let me just put this a different way. Let me make this easier on you. Since that 78.6 is right at the 109 level, if you see the 1 hour totals go -5, look to sell it anywhere below the 109 level. And as far as the stop order goes, initially you can put your stop at 109. It would be 251, I believe, or I'm sorry, 281, or a max of 50 pips. And then look for a limit today of just a 1-to-1 risk reward. So whatever you're risking on the trade, look to make that back. And I believe if it goes -5 on here, I think it can surely come down further. What you may want to do also is wait after 9:30, after the U.S. markets open, see how they shake out for you. But there's 3 different ones on here that I'm looking at as far as retracement trades. And all 3 of them are going to be retracements. Here was our dollar Swiss trade from Friday. If you trailed it using that 3-bar reversal, then you should have been good to go. Well, you should have minimized your risk substantially. There we go. And let me switch gears over here to the dollar Swiss. See, dollar Swiss is another one to where you can look for. It's also making a retracement. It's come down here right below the 102 level. Came really close to this 78.6% retracement area. You don't even have to look at the retracement on here. We know it's coming down. And this one's actually been making a divergence right down in here. You see how the dollar Swiss was coming down, but the LP trend line's pointing to the upside. The dollar, if the dollar comes into play on any of these three trades, I think it's going to be, I think it could make a significant move back to the upside. Let me put this at 102.00. If it comes back above that 102 level and goes to a +5 on the 1 hour totals, I think you can look for a further move to the upside. If you wanted to use more confirmation, you could wait for it to close above the 102 level. But it's already at like a +7 here. It's already making significant headway, showing LP liquidity providers favoring the buy side of the equation. And then for the stop here, you can actually put your stop a little bit lower. I put it 1 pip below the swing low. So if we go 1 pip below the swing low, or you could put it below the 100% retracement over in here too. But you could use this as almost a shorter term type of trade, because if it comes back above 102, if you're doing multiple lots, you could go limit 1 at a 1-to-1 risk reward. And then you can go limit 2. Since we'll have about 60 pips to look for, you can actually look for a 1-to-2 risk reward or a 3-bar reversal. Now, don't here at the start of class, it's 9:15 right now. I'm going to wait until after 9:30 to see how the markets shake out here before just jumping into any of these. There we go. And then, let's see. Oh, I'm sorry. Let me switch this around a little bit. Let me change this over here to pound dollar. Zoom out just a little bit on it. Pound's been forming kind of a nice little ABC right in through here, an A up to the 61.8 level. This would be almost like a longer term retracement here on the pound. It's got an A, it's come up to 61.8. The A retraced back to between 38.2 and 88.6 of B. I'm sorry, the B retraced between 38.2 and 88.6 of A. And then you got a C coming up right in through here. Now on this one, you would be looking for a touch of the 78.6 level and a -5 on the 1 hour totals. This would certainly be more of a longer term retracement that you're looking for here. If it comes back up to the mid range of this 4,300 level, this would put you into a higher amount of risk also. Your stop you'd put up above here at above the 100% retracement at 1.44149. Adjusting for spread. And with the volatility, you could also go for a 50 max. Well, on this one also, you can look for a limit of just 1-to-1 risk reward here on Monday. As we start the week off, see if we can't get some positive trades going here. So this be a longer. This is one that would take a longer amount of time to develop. This is called a Bearish Gartley. There we go. So those three retracement opportunities on there, and they're all looking really for dollar strength. Pound, as we all know, has been one of the weaker currencies as of late. If you come back up into the mid-range of the 4,300 level, that would be kind of a longer-term retracement on the pound. And then, of course, we've got our euro dollar, dollar Swiss working on here, which haven't quite cut the mustard yet as far as opportunities go. All right, so these are all looking at dollar strength. Whoops. So I can take those objects off the list. There's a lot of objects on there. I tend to go a little crazy in my charts in this class. Let's go ahead and look at dollar yen while we're in here, and this is going to be this is kind of the speculation play on here. And I'm going to put and this is all just looking at key levels on here of where the yen has been. But with the market indicating more of a negative open here, if it continues negative after 9:30, I think that we could get a nice retracement here on the yen. I'm going to put my horizontal support level right here at the 121 level, which is almost exactly where it bounced over since the opening on the weekend at the 121.00 level. It's almost exact. I mean, because it broke up through it, came down and kind of hovered right around there, came up, came down within 3 or 4 pips of the 121 level, and that's where it's been hovering. So it's been hovering right at this level right in through here, and here's the open from Sunday. So, you know, all this action back in here was from last week, but we're kind of looking at where the consolidation has been since the market opened. So on here, we're looking for a break below this 121 level. For a sell entry. So looking for a break of 121 and a -5 on the 1 hour totals. And the stop would be 121.429. And this would be considered a risk off trade. Now, let's let's go into more of the speculative part of it when it comes to like our risk reward ratio here. Usually on momentum trades where we're just looking for a breakout through consolidation, we would just look for a 1-to-1 risk reward. However, I think if it breaks down through this 121 level, we can easily make, if the markets continue down today, we can easily make, just a 50% retracement off of the move that it had on Friday would bring it down to the lower edge of 120. So looking at our limit, I think you could look for a 1 to 1.5 risk reward. I'm not going to go to 1 to 2 or anything like really dramatic, but if it breaks down below 121, I think it can make a larger move to the downside. You'd want to manage your risk appropriately, meaning make sure that once it does break down, you can keep trailing your stop down using a 3-candle reversal just to manage your risk more effectively, since we are looking for more reward potential on it. But if we do get a sustained sell-off today here at the market open, which it looks like could happen here after 9:30, I think if the yen is going to go trading risk off, which that's what we want here, is until I see the yen go higher, based on if the market were going negative and I saw the yen going and the dollar yen going positive, then I would say, well, yeah, this negative interest rate thing is really affecting the yen here. But since it's not, since Friday, it hasn't really gone higher. Even as the markets have sold off, it hasn't gone higher, and it looks like it's kind of winding up like a rubber band a little bit, and it could make more of a significant breakout here to the downside. There we go. And all of these, I would wait until after 9:30 to place. I would let the U.S. markets open up, meaning open. I'm not saying they're open up, but let them open. Here, I'll underline that real quick. Look for that to occur right down in here. We've still got a ways to go before it breaks through that 121 level, but that's where we'd be hoping maybe for a little bit of a sell-off today. We tried to get the dollar higher, a lot of these pairs higher on Friday. The market was up like 300 points, the Dow anyway, but we never got any further dollar strength. So part of trading is being a speculator. Nobody knows what's going to happen next. We use indicators and all these other things to try to gauge volatility and gauge direction, not volatility. But somehow that's easier said than done. So this is one to where you just kind of look for it to basically make a steady retracement to the downside, and follow that risk off on the yen. Yen had a couple of things going for it after they went negative on their interest rates. They had the fact that they went negative interest rates, but that also rose the global markets actually went up on Friday. So I mean that contributed to a lot of that yen weakness, if you will, not just the negative interest rates, but also the fact that the markets made significant moves to the upside. So where did I want to go next here? Where was I before the lights went out? There we go. All right. And then the last one here is sticking with that risk off approach, since we have oil prices on the decline. And again, really just looking at the same thing as the yen. But this is another one that could experience some volatility. And I'm just looking at this low here on the Cad Yen. See, the Cad Yen's been sitting here making some lower highs right in through here. It's kind of steadied out a little bit throughout this uptrend. Hasn't been making any higher highs on the LP trend line. This is one to where, you know, we'd certainly want to wait for these totals to shift, because if they do, I think this will come down and start making lower lows right in through here. So that's the beauty about using these totals, is since we're looking for overall reversals after the big jump we had up on these yen pairs on Friday, definitely want to use the LP trend line on this Cad Yen one, because we're just going to look for it to break. Here's the support levels that we've had. You can see it's been making some lower lows, lower highs right in through here. It's found a little bit of a base here. And this is another one that gives us a little bit more potential for a higher risk reward ratio. And put our stop. One pip above swing high, or 50 max. And then look for a limit of 1 to 1.5 risk reward. I guess it is 9:30, so you can take all these from now, I guess. Getting the markets opening up right now. Well, the Nasdaq's down about 30. S&P's down 10, or 0.5%. And the Dow's down about 81 points, but we are right here about 931, so we haven't gotten the full rotation yet, or what we used to call open outcry. Not sure they still call it that anymore, since everything's electronic. There we go. So right now, no significant moves on the euro dollar. Dollar Swiss just keeps on going down further. Cad yen, dollar yen. Dollar yen's, you see the dollar yen starting to turn a bit at this point. So essentially my thought process here, folks, is if the market opens to the downside and then starts to slowly make its way back up, meaning buyers start to come in, I think either this euro dollar trade or the dollar Swiss trade or even the pound dollar trade will execute. You don't have to take all three of those. You can just take one. You know, it's all based on your risk tolerance. You can just take the first that executes, if you will. So that's the first thought process. If the market does open to the downside and then starts to come back up, then, you know, we could see these pairs make a more significant low. And so that would be kind of trading the upside of the market today, or what we call risk on. And risk on, we're trading into dollar strength, because that's what we saw on Friday. As the markets went up 300 points, the euro dollar dropped. We picked the wrong pair, actually. I mean, we should have gone euro dollar on Friday. We went dollar Swiss just because I thought it had more room to go. But we should have went euro dollar. That one made the most significant move on Friday. But yeah, you live, you learn. So market goes up, dollar should gain strength versus at least versus euro dollar and dollar Swiss. Market continues to the downside. I think dollar yen or Cad Yen, one or the other. I think it will create selling across the board, not just on the indices, but also on the commodities like oil. And you'll see dollar yen or Cad Yen start to fall. And in that case, I think that would be a case for selling into risk off. And the reason why I think it's in our best interest to sell into more of a risk off trading today is because if the yen continues, if all this negative interest rate decision that we had, if the yen just continues to trade risk off, then you'll probably see, I mean, as much as this came up and the yen got weaker right in through here, it can fall even faster if the market sells off, if volatility comes in and starts hitting on the yen. So that's one that we'll have to just keep an eye on. It's very close right now on the yen. Very close to kind of coming down and breaking below that 121 level. We'll just see. We'll just have to see if the market falls further to execute on that. But if it does break through that support, I think it obviously, based on what I'm saying right now, I think it can make a further move to the downside. That's always kind of a Mr. Obvious thing to say. Well, if it breaks through that support level, I think it could go down. Well, yeah, that's because that's why I'm selling it. So I guess you don't even have to say those types of things. All right. Those are the ones that I'm going to go with today. Since it is Monday and there can be some whipsaws. Yeah, Phil, we have that one on here of selling into the bearish Gartley on the pound. That's the other retracement that we're looking at, that little ABC correction. So that one's on there. We have 3 retracement opportunities on euro dollar, dollar Swiss, and pound. So those are all retracement opportunities. Good call on that, by the way, Phil. Phil said bearish Gartley on the pound. It's like, nice. So let me save this for today. 21020116. And dollar keeps falling. It's not necessarily a bad thing. On this euro dollar trade, by the way, the reason why I put below the 109 level is just because even if it comes up and hits the 78.6, 78.6 is right at the 109 level. So you want it to come back down below, even if it does make a significant break. Let's see here, Cad Yen. This one could be a mover today. Staying away from Aussie because they have their interest rate announcement tonight at 10:30. Glenn Stevens, the head of the Reserve Bank of Australia, they've been signaling that they're probably going to lower rates at some point. I believe the vast majority of people are expecting the Aussie. That's the one significant news announcement, but we're kind of staying away from that one because they're expected to keep rates unchanged. However, with kind of the debacle happening with China, since the start of the year especially, has been the big talking points at the beginning of the year. It's very hard to tell, what they're going to do or what their statements are going to be. So we're going to just stay away from Aussie for right now. If Aussie starts to break down, I think CAD would break down, the Cad Yen would break down, and New Zealand would break down, and dollar yen will probably break down along with it. So, that's why we're choosing just either dollar yen or Cad Yen to trade on these. So let me go ahead and save this as a PDF. And then close down my worksheet here. There we go. Probably the closest one to execution right now is probably on this dollar yen right in through here. It's probably the closest one to execution. Euro dollar starting to get close. I guess dollar Swiss is pretty close, but dollar yen, you can see it's starting to make some significant lower lows right in through here. The 1 hour totals are starting to turn. See, it's been making some higher highs, but it's been sidling out down in here. If it goes -5, this thing's going to start dropping. That often happens when you're trading into retracements. Because you're trading, when you sell into a retracement, you're trading into an uptrend. You're selling into an uptrend. Well, that's why he always gives us higher risk-reward ratio when we sell into retracements. So that one's pretty close right in through there. It's at 121.09. See, Euro's starting to make a bit of a turn here. These higher levels. See, we got dollar Swiss still down here at 118.29. Cad Yen hasn't made a significant move yet. So yeah, dollar yen's probably the one that's closest right now. It's probably the closest one to execution. That's what it looks like anyway, because it's one's closest to the 121 level. And it's certainly closest. It's, just a couple of ticks down away on the 1 hour totals to go in -5. So, and then if it breaks through there, we'll see if this market can fall down the stairs a little bit. And that yen can give back some of its losses or take back some of its losses from Friday. Let me go ahead and share the handout with you over here. That should be loaded in there for you. I'm starting to get them further move up on euro dollar, dollar yen, trying to come down. What's Mr. Cad Yen doing over here? Starting to get a little bit of a move here. So there's our support level right in through there. 121. All we have to do is watch that one. Just hanging on here just for a second to see if we can't get an execution. Dollar yen's not going any further negative, starting to come back up a little bit. I would love to see oil take a beating today. That could cause Cad Yen. If oil takes a beating, markets will probably go down. you'll probably see, and that Cad Yen will probably make some significant moves lower. So be watching these two right after class. If you want to go for lower amounts of risk, you can go dollar yen. Put a higher amounts of risk and stops in, you would go Cad Yen. You could do one lot of each if you want, because you'd be shorting basically oil and the markets, looking for them to come down. But remember, don't risk more than 2 to 3% of your account. So be on the lookout. Dollar yen and Cad Yen are two that you'd probably want to be on the lookout after class here. Then euro dollar's coming back up to that 78.6 level. All right. So I'm going to go ahead and end things here because I got another call I need to get on here in about, I guess it'd be about an hour. So I need to get my blog all written out. So I'm going to go ahead and stop the recording.